On this video, we're going to look at the last two requirements for question 3 in the homework for chapter 3. So let's start by looking at this balance sheet. The balance sheet actually reported a balance in retained earnings of $35,880. But if we go back to our trial balance, we don't even see a retained earnings account because we didn't make any journal entries into retained earnings. Instead, we created these accounts that impact retained earnings: dividends, revenue, and expenses, right? Those three that affect retained earnings, but we didn't actually make a journal entry into retained earnings. So we're going to look at the closing process of how we're going to get that balance that we reported. Here we go. This balance that we reported on the balance sheet into the account so that we'll have a retained earnings account. So I have copied and pasted that into a document here. I split it into two parts because, recall, we didn't have a retained earnings account. So this is the same thing that you see in the solution for the assignment for my version. And here's what we want to do. When all is said and done, we would like the dividend account. Okay, it has a debit balance. We'd like it to be 0. And you know what? Let me start with. Actually, we want all of these to be 0 because. So let's say I know my line is supposed to be a timeline. I'm sorry. When it's down at the bottom, I have trouble controlling my pen. But here's year 1, year 2, year 3, and here's the dividers for those 3 years. And essentially what we're doing over time is throughout the year, we keep recording revenue and it accumulates. We keep recording expenses and those accumulate as well. And then we end up with this revenue and these various expenses. But at the end of the first year, though, we want to empty those accounts out so we can start down here and the following year, remeasure revenue and expenses for the second year. Then we want to empty out those accounts just like a cup of water. You want to pour the water out so you can add more water in the third year and start measuring revenue and expense all over again. And this is called the closing process. We want to close revenue and expenses, and we'll see dividends. We'll want to do that to them as well. So let's start with service revenue. It has a credit balance of $80,400. We want at the end, this is post-closing, after the closing entries, I want that to be a 0. Well, if it's a credit balance and I want it to be 0, I can reduce service revenue by debiting it. So if I put a debit to service revenue, right, if I made a closing entry of $80,400, debit to that, so a credit minus a debit gives us a 0 balance. So I debit service revenue and I'm going to credit retained earnings. Recall, crediting retained earnings causes it to go up, and we're going to have a credit of $80,400. And so there's my debit and credit for the first closing entry for revenue. For the second one, and that zeroes out revenue. The second one, I want to get rid of the expenses. So those have debit balances. And here again, I want those to be 0 so that at the beginning of the second year, those all have 0 balances. So if they have debit balances, we will credit those. So I credit the accounts for their balances. So a debit balance, credits are negative then. Debit minus credit gives me 0 balances. So I credit those accounts. Crediting them reduces them. And then I'm going to debit retained earnings. I add those credits up. That's the $29,520, and I will debit retained earnings. Debits to retained earnings are a decrease. Credits cause it to go up. Debits cause it to go down. So in retained earnings, here's all my revenue, here's all my expense. And then the last one I want to zero out is dividends. It has a debit balance. I would like it to be 0. I'll do a different color here. So debit, I will credit it to make it a 0. So here's my closing entry. So I have a debit, subtract a credit. That will give me an ending balance. These are post-closing balances. And this is my closing entry. So debit minus credit gives me a 0. That reduces it. I need a debit to balance. Debit retained earnings, 15,000. Okay, so so if I take this credit to retain earnings minus these two debits, I'll get a credit balance of 35,880, and that agrees with what we had on the balance sheet, 35,880, and now I'm getting the number into the accounting system. If I go through, and of course the author saved you time. He didn't have you, this is in the general journal. He didn't have you post to the ledger, but technically you would. He bypassed having you do that. So this is like the posting of that to get these ending balances. So on our final trial balance then, it is going to be so notice we didn't do anything to cash. It stays at 39.9. And then all of these assets, I just bring them over. The closing entries do not impact assets. It does not impact liabilities. Nor did it impact the common stock. So the only thing, closing entries, retained earnings, and then the 3 kinds of accounts that impact retained earnings at the end: revenue, expenses, and then the dividend. Okay, and then, we would add that up, and that will give us our post-closing trial balance. And so the debits are going to total 98,180, and the credits will total 98,180. And I can go here in requirement F, and there's my solution. All I have are assets. I have the 3 liabilities, common stock, and retained earnings. And then we're done. And then this is what will be, these balances reflect what's in the general ledger. These become beginning balances for year 2, and then you're ready to start processing transactions for year 2.